Price action is the most popular day trading strategy these days, it seems. Too bad this strategy doesn't work. Of course, it being the most popular retail trading strategy out there probably should have been your first warning sign, but this strategy seems to be particularly good at fooling people, which is why I think it warrants some special attention. So, let's talk about why price action is complete nonsense. So what is price action exactly? Well, that's part of the problem. There's no central theory or unifying philosophy to define what price action actually is. There are numerous courses and resources that all seem to have their own approach. The only thing that seems to be truly universal is the idea that the movement of price matters, and that can be used to predict future direction to generate trading profits. That usually means trading with a raw chart without any indicators on it. So there is a lot of ambiguity to it, but that ambiguity is really part of the appeal. Price action is a really generic term that can mean whatever you want. I say the reality is that price action has really just become a way to market technical analysis without actually calling it technical analysis. It gives the credibility of being part of a unified school of thought without having to deal with the tarnished and debunked brand of technical analysis. In fact, price action traders love to rag on technical analysis, claiming that technical analysis is using lagging chart indicators. To be fair though, the term technical analysis has also been morphed so much that it can mean almost anything. And you're going to see this over and over again with price action trading. The whole thing is designed to give its promoters maximum wiggle room so that you can never nail them down to anything. So instead of having specific setups or proven information, price action systems tend to be more like a loose collection of heuristics. You know, like trade with the trend, except when it's ranging. Or tell me if you've heard this one before, buy low and sell high. Or my favorite, trade what you see, not what you think. Or what you think you see. They're selling it like it's a technical system, but it can't be a technical system, you see, because then people would backtest the setups and realize that they don't work. So it has to be a discretionary system. That way, if people lose money, it's because they read the chart wrong. Or maybe they have unresolved issues in their childhood causing them to self-sabotage. I actually have tried backtesting a few things that seem to come up in price action over and over. The most difficult one was to do a proper backtest with your typical swing/zigzag indicator. For instance, if there's a double bottom or a higher low, and what I found was that such locations were particularly noisy. It's almost as if the market is statistically efficient. But it doesn't matter what kind of data you show price action traders, they always have a way to explain away whatever data you present to them. They'll say, it doesn't work in that particular situation. So then you add filters to it to account for the larger trend, or where we are in the opening range, or whatever other thousands of variations that machine learning can come up with. You see, all of that stuff can be programmed too, and after hundreds of thousands of different variations, I have yet to find any price action setup that has statistically significant profits. The reality is that there is not a single shred of empirical evidence that suggests price action works. Everything I talk about on this channel is something that I can back up with empirical evidence. I rely on facts for my authority. For instance, my stylized behaviors and inelastic markets video, key pieces of knowledge to how the markets work that are not widely known among retail traders. And yes, much of that information seems to contradict things that price action traders often believe. We're talking about solid, peer-reviewed research written by some of the most successful minds in our field. How you incorporate that information in your strategy is up to you, but at least you know the information you're trading on is backed by science. That's my obligation as a creator with a public audience. You shouldn't run around claiming things if you can't back it up empirically. You watch. They're going to be in the comments. They'll claim price action works, but they'll refuse to provide any evidence. So before you write that comment, ask yourself, what empirical evidence do I have? Do I have 5 years or 10,000 trades worth of data? If you don't have that much data, don't waste your breath. And yes, we really would need 5 years worth of data. That's because of my biggest pet peeve with price action trading. Strategies marketed as price action almost always involve taking on excessive risk. What I mean by excessive risk is that the amount of money that you're risking is often more than you're actually going to make. For instance, you take a 4-point profit with an 8-point stop. Having such large stops tends to result in a strategy that works for a while and then blows up all at once. That's why you have so many traders claiming profitability over the past 2 years only to get demolished in this most recent bear market of 2022. They were trading a strategy that took on excessive risk in the craziest risk on market ever. Everyone makes money in that kind of an environment, and it has nothing to do with the strategy. When markets get rough though, you need an actual edge to generate alpha. And this is why some of the biggest names in price action that have been around for decades still refuse to show their results. If you're going to make claims of profitability, you have to show your results. I'm sure that a lot of these newer people are just naive, so I don't want to make it seem like that everybody in the price action field is trying to screw you over, but some of these old hats definitely know the game they're playing. It's the perfect system to fool people with randomness in the short term. Price action traders on YouTube are particularly guilty of exploiting this. They can put a big number in their thumbnails every day to get the clicks, and to the viewers, it appears that they're making money consistently. When they blow their account, it just kind of gets memory hold and everybody forgets about it. And look, everybody blows accounts. I've done it many times during my live streams. The issue I have is using clickbait thumbnails to lure people into false expectations of profits. Traders don't find out the negatives of the strategy until they experience it for themselves, and by that time, it's already too late. So, argue with me in the comments. I'm sure this video is going to stir people up. I mean, nobody likes to admit that they're being suckered. Heck, I wouldn't be surprised if people came after me and my channel personally, because this video is a threat to their trading education empires. Personally, I look forward to reading all of the excuses for why people can't provide empirical data. And hey, who knows, maybe somebody will make a good argument and we can use that for follow-up videos. Anyways, don't forget to check out the live stream every weekday at 8:30 Eastern Time. In the meantime, stay excellent, team.